What's up guys, welcome back to my channel, GGFOREX here, and on today's video I'm going to be going over order flow, how I read it, how I like to see price, what I like to see price do, and how I trade it. Now not everyone's going to trade this way, not everyone's going to agree with me, and that doesn't matter. This is how I trade, or how I like to trade the markets using order flow, right? Other people call this trending markets. I don't really like trend, I like to read the story. I have to understand what is going on. I need to understand the bigger picture. This is just a confirmation in a bunch of confirmations for me, okay? For me to do this type of trading, I need to firstly understand the higher time frames, right? I am trading on the 4 hour, because that's the time frame I like to trade on, especially when working a 9 till 5, because it gives you all that free time. But before I do that, I need to know what's happening on the monthly, what's happening on the weekly, what's happening on the daily, where's the price going, what are the reasons, what is it trying to do. Then on the 4 hour, where's evidence for that, where can I get in, right? It isn't just one thing, it's a bunch of different things, all of it coming together to tell you a story, and then you making an educated decision and putting a trade into a market. Putting your entry in a logical area, having your TP in a logical area. Don't just shoot for the moon and fingers crossed you're going to be a millionaire. Doesn't work. And having your stop loss in a logical area. Okay, so that's what I'm going to do. But before I start that, I just want to say thank you for all the kind messages from you guys on my previous video, in the comments and on my DMs and in the GGFOREX group. They've been amazing. So thank you for saying well done for passing stage 1 on the Ftmo account. I'm actually on my verification account now on 5%. I'm in AN. I am up 2%-ish on that trade. It is a 1 to 5, so if this trade wins, then I've passed the verification in one trade. So fingers crossed that happens. Again, as I said, my TP is in a logical area, okay? Everything makes sense. I'm not hitting and hoping. This is purely educated decisions, okay? But again, thank you guys, and let's just jump into the charts. Right, I hope you can see me in the corner. Hopefully my screen is recording and everything. I've edited this properly to get it in time. So what I'm looking at, as I said guys, I have to look at the bigger picture. What is going on? What am I seeing? Okay, so I'm going to stick to the 4 hour time frame and save the higher time frame bias for another video. Okay, so price has pushed up, okay? This area, right? This area down here, I'll make it a brighter color so maybe you guys can see it. This area down here, right? This caused this huge push up and price started to come back down. It came back down, but didn't get that low, right? Didn't come down far enough to get out of these orders, right? Candles are orders in the marketplace. They are not just random pretty patterns, they are people putting orders in the market. And if you know the Forex market properly, you'll understand that's $5.3 trillion a day get put through these markets, okay? So these orders, to make this huge move happen, to make that happen, you need to spend hundreds and hundreds of billions to push price that high, okay? So this area is super significant to me. This is super important, right? Because they are in drawdown here. If you sold to buy to create this move, if you sold it to get a discounted price to then push price back up, you are in drawdown. They've made money on the way up and they are losing money on the way down, because remember, the banks have to hedge, right? That means they are selling and buying at the same time. So I know that they want to eventually, it doesn't have to happen all the times, right? They will eventually want to bring price down here to mitigate out of their orders, okay? So, price came down, not quite filled this sort of imbalance, because obviously you got here as well. You got imbalance in price that hasn't been filled. And obviously if you can see, make it a different color so you can see that. Obviously you can see price has filled that imbalance and mitigated out these orders eventually. But let's say you couldn't see this, right? How am I going to trade? If I'm saying that my high time frame bias, I'm going to keep that there though. Let's say my high time frame bias is, I believe price wants to come down to mitigate out of the orders to then follow the trend and come back up. Because what we are seeing is really a reaccumulation on the daily time frame. So if I, where's the replay tool? Right. So I actually came up to this chart whilst I was doing the whilst I was doing my actual account, but I didn't get this trade, right? I didn't get half of them, I got one of them, right? So what I like to see is I like to see big moves in the market. I like to see big push. I like to see big buys and big sell-offs, or big sells to then big buys, because I know that's where the money is. That's where smart money got into the market. That's where the banks stepped in, because again, you need lots of money to move the markets the way that they have. So if I'm having a look at this story here, okay, they created equal highs. They took equal highs. Right, people would have seen this as a support, okay, bounced off once, bounced off twice, bounced off again, and then bang, broke that, came down, and also took out their trend line. This is why I don't like trend lines, okay, because people on the lower time frame, if I go to the 15-minute, because obviously this is a 4-hour chart, so on the 15-minute, people would have been seeing this as, look, price came down here, bounced, price came down here, bounced, on the next one, price came down here, bounced. They would have put orders in the market, right? So this trend line is just a giant liquidity pool, okay? And they took out the sellers, right? So people who are selling this market have now been taken out. Now, where's price going to go? Price is now taking out people who are buying the market. So what caused that move to happen? Is this candle here, okay? Let me get my Fibonacci out. Let's see how discounted price is up in this area. Now, to me, this is a massively discounted price. Okay, so this would have been a signal. Now they've taken out the buys, right? They've taken out the buyers in the market. This, to me, is a signal that they might want to push price down lower to go with a higher time frame bias of bringing price down back to our key area, right, on the daily time frame. Again, reading the charts, giving it to you a story, what is happening, not just patterns, reading behaviors of the market, right? So to me, I would take a swing at this trade, right? I would have gone in that candle there, done a bit above, added a bit of fat, because 100% of nothing is still nothing, okay, right? And where am I targeting? I would have targeted these equal lows here. Personally, I won the 6, played it safe, but for the sake of this video, I am going to be going for our point of interest. Why? Because that's where I believe price is going to come down to. If you want it to be more conservative, you can have price come down to here, because there is a little bit of imbalance. This candle still hasn't been mitigated, which caused this move, so you could get some sort of resistance in this area, and that would have been a safer TP, and it's still a 1 to 5, still a great trade, right? And you would have been in and out a lot faster than if you're going to target down here, okay, at a 1 to 8. But this video, just going to do a 1 to 8, okay? So let's just let price play out, and let's see what we can see. Remember, on the 4-hour time frame. Right, so we've been mitigated in. And what I want to see now, if I was triggered into this trade, is a nice bearish engulfing candle. This doesn't mean that it will win, but in my mind, it is a nice signal that price will want to reverse. And then if I zoom in on this, on the lower time frame, and I see a distribution happening, then that will be an extra confirmation, okay? And if you think about it, what's it doing here as well? It's drawing in retail buyers, because I have a 20 SMA on this. I don't trade it how retail traders do it. I have this, so I can see what they're seeing, right? And I know how they trade it, so I can see what the retail traders are seeing and how they would trade it. So I'll do the opposite, because I'm seeing people, right, they're going, oh, it's broken above this 20 SMA, whatever it is, EMA, SMA, and it's rejecting off of it. So I know people would just be putting in buys, right? Buys, just because price has rejected off of this SMA and had a huge bullish engulfing candle up, right? Not considering the whole story, not even taking into considering the higher time frame bias, what is price actually doing. They're just following an indicator, a lagging indicator that doesn't mean anything. Okay, so I have this on my charts to see what they're doing and see where the banks can manipulate them out of the market. But let's just keep playing price out. Price is taking out those EMA sellers, right? So price is working down. Now what do we have? Right, this is a 4-hour chart. So this is in one day. We're now about to see what's going to happen on the next day. Remember, order flow. I think price wants to come down to this yellow area here to mitigate out of their orders, right? So we have now got internal breaker structure, okay? So this is an extra confirmation for me, right? To say, hey, price has violated this low, which caused that new high, right? It's now broken that low. So now there's more confirmation for me that selling is in the market, right? So I'm going to get my fibs out again. If I can. Let me see where this candle is, right? A candle is in a discounted area. Where did all the buys take place? All the buys took place on this huge push up, right? So that is where my second entry would go. Now, if you are in an Ftmo challenge, you need to be aware of leveraging, where you cannot be over leveraging your positions. So if you're doing a private account and you have none of those rules, great. If you are in an Ftmo account and you're doing a trade like this, just be aware of how much risk you're actually putting on, because all these could lose, right? So if I have 5 positions at 1% each and all of them lose, I've lost that account. I've lost the challenge or whatever you're in, okay? But again, if you're doing a private account, that doesn't matter and you can just do it how you want. But bear in mind, you need to trade your plan. If your plan says have no more than 2% risk per day, then you're only going to have trades up to that risk amount, okay guys? So just make sure you trade that plan, don't get carried away and don't triple stack positions, because if you don't know what you're doing, or if you're, I don't know, if you just don't know what you're doing, it will bite you in the butt and it won't be pretty, okay? So let's just keep playing price out and see what happens. Okay, so price has come back, mitigated the orders. What do I want to see again? I also want to see the same thing that happened here. I am now looking for price to break this low. Why? Because that proves that price definitely doesn't want to come down, because it's now violated too low. So I'm going to wait. So what I'll do is I'll set an alarm here to see when price broke that low. Remember, it's a 4-hour time frame. You've got plenty of time. There's no rushing this. There's no trying to get in on really lower time frames. It's just setting it and forgetting it and letting price play out. So now we're in one position at a 1 to 8 and we're in another position at a 1 to 3.6. Okay? Right. Price has now broken that low. What caused price to break that low? Well, to me, it was this huge push. It wasn't this tiny little, whatever you call it, shooting star, inverted hammer, or whatever retail traders call it. The money, what was put in to push price up to mitigate out of their orders on that one, which then broke this structure, internal structure to the downside, was caused by this. So I'm going to smash all those 3 candles together. Okay, because the little 2 dinky ones don't really mean a lot. The full body, that price action, the orders came through was that one, okay, was actually that huge push up, right? If you went to a high time frame again, maybe an 8-hour, it might cram it all together and it might be a lot cleaner. But for the sake of this video, I am going to just leave it on the 4-hour time frame, right? So let's just play price out again. What happened? Okay, it came in. It never went to that little weird inverted hammer, wherever you call it, banker's candle. It came back to where they got into the market, where that movement happened, that price action. Okay, the candles are the only indicators you should need, right? It's now broken these lows. So in my head, it's now broken these lows. But we are getting close to our point of interest. So what caused this break of this internal structure? This candle, right? But bear in mind, it is high risk, because now the more you are selling the market, the more you're selling it, right, the less of a good price you're selling it at. It is now becoming more and more discounted, okay? So buyers may be getting tempted to come back in because price has now stepped down quite a bit, okay? So bear that in mind, right? So let's just play it out. Right, it's now higher risk, okay? Because it has hit our point of interest. So this would now be a higher risk trade. It has hit this point of interest. So if I'm in this trade, right? So 1 to 8, that's hit TP. A 1 to 3, let's just get my calculator up, right? 1 to 8, that's hit TP. 3.6 hit TP. Right, and what's the second one? 2.8. Okay, so I have just made 14.4% on those 3 trades, right? So if this one loses, remember I'm only risking 1%. This one loses, I go back to 13.5%. Still not bad, right? But accepting the risk, because it has hit a point of interest where we thought price was going to reverse before. Okay, let's just see what happens. I generally don't know. Price is messing about, coming down, letting it play out. There you go, stopped out. Okay, so we had 1 win, 2 win, 3 wins, came down to our point of interest, right? So you could either say, hey, it's hit my original TP, it's taken out my target, I'm no longer getting in the market again, because price could easily blast through this and keep them going down, but we don't know. That's not our story, that's not what we had, that wasn't our plan, that wasn't our trading plan, right? This followed the plan, this followed the plan, this followed the plan. This was high risk and we accepted that risk when we put the trade on, okay? But 13.5% or 14% if you didn't put it on after that, because that was a perfectly valid trade if this wasn't mitigated, right? I would definitely have taken that trade, because again, it just followed the pattern, okay? Massive movements happened in the market, breaking structure. What caused that break? That's where the money got in. That's where I'm going to enter the market. That's how I like to read the markets. That's how I like to read the charts. And that is how I have managed to pass at stage 1 Ftmo, purely of the 4-hour time frame. Not going for random shoot for the moons, not going for hit and hoping, reading price. It's not always going to be a 1 to 8, sometimes it's going to be a 1 to 3 or a 1 to 2, right? That's okay with me, because those little wins add up to 10%. And just think about this, guys. 10%, when you have a £70,000 account, you're making 7 grand, right? Let's just do this on a £70,000 account of what just happened, right? This is going over one pair trading like this, okay? It's going over 1, 2, 3, 4, 5, right? 5 days. Let's just see if it is within a trading week. So it's the end of the week before and then following midweek after, not including the Friday. So it's the Friday from the week before to the Thursday the week after, okay? That was our trading range. 5 trading days. I got hiccups, let's just get rid of the screen, okay? So on a £70,000 account, and let's just say we didn't do that other trade, okay? Let's just keep it at 14%, right? On a £70,000 account, I hope my maths pays off here, okay? Right, times by 0.145, 14.5. We're gonna call it 14.5, okay? You would have made £10,150, right, on FTMO by just trading like this, right, on a £70,000 account. I don't know what that is in dollars. Do the exchange rate in Google. Right, so £10,150, and we're taking 70% of that, right? 0.7. You're taking home £7,000. £7,000 on free trades at a 4-hour time frame, and you're doing it logically. You're following your rules, you're waiting for proof, you're seeing what caused that, and you're just playing the trade. You're planning your trade, you're trading your plan, okay? Just for those free trades alone, you've passed Ftmo with those results, and when you do, and you get a £70,000 account, you've made £7,000 in free trades in 5 days. And then you could call it quits. So maybe you think 10% a month is fine. You got 14.5. That might be it for you for the month. You've done those 5 trades. You go live life, do what you want, take that money, invest it. Maybe you put all that money into a private account, and then you trade your private account. But if I was trading my private account, I'll be risking 2% per trade because I don't have the Ftmo rules to go by. Right? So I would have done the exact same trades in my private account, but risking 2%. So I would have made 29% gains. And let's say my private account, hypothetically now, was £70,000. Right? So let me just do it again. Right? £70,000, and you did 29% growth. You made £20,000, and yes, you keep that because it's yours, right? You don't split it with anyone. You made £20,000 in your private account, and you made £7,000 something on your Ftmo account after they've taken their cut, and then you're left with your cut of just free trades on a 4-hour time frame. It's literally crazy. Like, hopefully you learned a lot from this. This is order flow. This is how I like to trade it. I like to read the stories of the market. I don't trade patterns, I trade behavior. What is price doing? Where does price want to go? Where's the evidence for that action? And then I just play my trade. Plan it, trade it. Okay, guys? Anyway, I hope you enjoyed this video. If you have, let me know in the comment box below. If you haven't already, join the GGFOREX group. The link is down below. And join the family, because I'm answering as many questions as I can and leaving little nuggets along the way. So, see you in the DMs. I'll see you in there. Love you all. Like, share, subscribe, and I'll see you on the next one.